Hello everyone, this is Manav Modi, your bullion analyst. Welcome to the Commodity Buzz. Let's take a quick recap of the last month and what's expected ahead. Before we move ahead, don't forget to like, share and subscribe. Looking at precious metals, in August, gold rose over 2% while silver traded volatile in a broad range. Major factors triggering volatility last month: Jackson Hole Symposium, Fed rate cut expectations, escalating geopolitical tensions and economic data points. Governor Powell hinted at a possible rate cut in September, noting that while inflation is approaching 2% target, focus will now be on the labor market. Economic data were a bit mixed. Jobs, inflation and housing number were weaker, but GDP and consumer spending showed some strength. Dollar index hit a 13-month low but recovered towards the month end. Domestic prices now did see some recovery post 9% duty cut, but momentum is still lacking. Renewed geopolitical tensions last month also boosted the safe haven appeal for both gold and silver prices. Industrial metals recovery supported silver prices. Looking at current fundamentals and factors, we believe both metals have formed some strong base, but we could see some broad range trading till we don't get some clarity on US interest rate cuts and geopolitical tensions. In the energy pack, crude oil prices were highly volatile within a range of $70 to $80 range. Geopolitical tensions continue to support the prices. On Libya output cuts, biggest risk is production to fall from current levels of 1 million barrels per day to zero. OPEC Plus faces moment of truth on planned output increase. Europe demand for diesel type fuel is expected to be worse in 2024 than COVID pandemic. US gasoline consumption was 27% less than in 2023 driving season. China demand growth YOY to be just 0.2 million barrels per day in the first half of 2024. Prices are expected to stay negative as demand concerns will continue to pressure the prices. In the base metal pack, copper prices have been highly volatile, correcting by over 25% from the peak but trading flat in the last month. Optimism regarding China property increased as officials announced a few supporting measures. China exported large volumes of copper, indicating weak domestic demand. LME copper inventory reached a 3-year high. Limited policy measures from the third plenum have disappointed the market participants. Increased imports from the Democratic Republic of Congo led to a higher supply in China. Expectations of price pressure or consolidation due to a soft demand outlook is to be seen. Aluminium rallied by about 5% over the last month, supported by tight supply of raw material and US rate cut expectations. Tightening supply led to LME aluminum stock dropping by about 22% in 3 months. Monitoring developments in China, inventory levels and global manufacturing will be key to navigating the market in the future. Zinc rallied by about 5.5% on expectations of reduced supply and seasonal demand increase. The TCRC dropped to a multi-year low of $10 per ton in China, significantly below the annual benchmark of 165 per ton. Shanghai zinc inventory dropped by about 50,000 tons from peak, still higher than the beginning of the year. Few European smelters have also reopened, offsetting the Chinese output. Declining mine production, tightening raw material supply chains along with production cuts and lower treatment charges signal a squeeze on the market. So this is it on commodity side for this month. Stay tuned on our social media channels for further updates.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.